Hello everyone, this is Professor Kent. Today's recording is part 2 of homework and part 2 of homework for chapter 50. The first question that we're starting with is exercise 15.7. Again, this question is at the back of your chapter for your volume 2 intermediate accounting. In this question, the first part is asking you, no dividends were paid in 2021. On December 30 wants to pay a cash dividend of $4 to common shares. How much cash needed for the total amount to be paid to preferred and common? So this question is a little bit different from the other questions. In this question, we don't know how much dividend they declared. They said that they want to pay $4 dividend to common shareholders. That's what they wanted to do. So before we get to anywhere, we needed to know what is happening in the question. So in the question, if you read the question, we have a preferred shares and we have 25,000 shares are outstanding, and this is the value of our preferred shares. We have a common shares. The value of the common shares is that we have contributed surplus. And they said in this case, they told us in the question, the preferred shares have $2 dividend rate, are cumulative and participating. So we needed to work out a question with the cumulative and participating and fully participating. So we needed to know how much to give it to preferred, how much give it to common, and the total amount. In this case, the total amount is missing, so we have to work backwards to get the dividends that was going to be paid to them. The first thing we needed to know is we needed to know what the arrears are. So we have arrears. Arrears are only for the preferred shares. In this case, we have 25 shares issued, and the dividend rate to the preferred is $2. So but they haven't paid for the 21 and for the 22. So this 2 year is for my year 2021 and year 2022, and this is the dollar value of the dividends that we're paying. If we gave them 100,000 for the arrears, they don't get anything. So we paid 100,000 to preferred. Then we are going to go give them my current year. So current year will be 25,000 times the $2 that they have to pay. That is your 50,000. And if it's a so we dealt with the cumulative, now we're dealing with it for the participating. When you're doing a participating and they are telling us the in distribution excess of $3 dividend to the common. So when you have for the current year, if we pay them $2 and we owe them the $3, so their share will be $3 according to their ownership or according to their number of shares issued. In this case, it will be 180,000. So we automatically paid 230,000. Then what the question said, that when we're going to read the question further, they said we have to give common shareholders the $4. So altogether we have to pay them the $4. Now we already pay them the $3, so we owe them one more dollars per share. So we pay them, so we owe them $4 altogether. For the participating portion. So participating, we already pay them the participating of the pro rate dividend. So we already gave them 60,000. We want to know what proportion we give it to them according to their ownership. If I were to look at it, I will look at it 60,000, and what we did is we know that we pay them 60,000 and the ownership of common shares will be 180,000. And what percent did we give it to them? We gave them 3,333%. If you gave them the 3,333%, if you take it to 4 decimal places, it'll be, that's how much we give it to the common shareholders. The value of your preferred share was 750,000 multiplied by my 3.333% gives me the 25,000. So we gave them the 25,000. So altogether we paid 100,000, 200,000, 60,000, 230,000, 60,000, and 25,000. If I add all the amounts together, that's how much dividend they paid out. In this case, it works out to be 415,000. You can rework out this question the way we have shown it in the previous questions by starting with 415,000 and working it out the way we have it. So if you had issued a dividend of 1415, you have to minus all these dividends, then it'll be worth 0. So that's how the first question was worked. In the class, I showed you that if you put this number and rework out this number, you will get the same answer. Let's go to part B. What is part B is saying? The company decides instead it will be declared 15% stock dividend on the outstanding common shares at the fair value. The common shares fair value on the date of declaration is 45. So we're doing an entry at the date of declaring a dividend. We are not paying the dividends, we're just declaring it. Whatever type of dividend we're giving, we're declaring a stock dividend. We have how many shares we have it issued? Common shares 60,000. If you have 60,000, we're giving 15% dividend. The fair value is $45, and that will work out to be 405. We're declaring a dividend, and then your entry will be stock dividend, and credit will be common stock dividend distributable. Common stock dividend distributable, and that is 405. If they say that we paid them too, then you have to do another entry. So it will be, if this is only at the time you declare, and when you distribute this dividend, then your entry will be, in this case we only have one entry because they just said at the time they declare a dividend, there's only one entry. If they were to pay that dividend in the common stock, then you have to debit the common stock dividend distributable, and credit will be your common shares. So let's do my part C. What is part C? Part C is that is this a company, instead of company paying a stock dividend or a cash dividend, what they did is they repurchased their own shares. They acquired and canceled 10,500 of their shares. If they reacquire means that they repurchase their shares. If they repurchase, the first thing you needed to know, what is the book value of your common shares? How do we calculate the book value? The value of your common shares is 8 million. How many shares are issued or outstanding? 60,000. The book value will be in this case I'm just gonna $30 per share. So that's the book value, and we know that that's the book value. And what is the fair value of your shares? Fair value of the shares is $45. So if the fair value of the shares is more, then means we wanted to know is, if it's a more, we have to first clear our contributor surplus, and then the leftover contributor surplus, clear a contributor surplus. The second will be any difference will go to my retained earning. Do we have anything in our contributor surplus? Yes, and this is it has a credit balance. In order for me to clear it, before I go further, I know that the difference is $15, and how many shares we acquired? 10,500. And if I acquire 10,500, the difference is 157,500. From that, I clear the contributor surplus to 150,000, and 7,500 will go to your retained earning. Before we do that entry, first thing we needed to do is I have to take out my common shares, value of my common shares. In this case, it was 10,500, and we have $30 per share. The value of the common share that we are getting rid of, our books will be 315,000. So that's my book value. The cash that we paid will be the fair value, which is your $45 per share. and that will be 472,500. So we said to clear all the contributor surplus you can, but we only have 450,000. We debit the contributed surplus. That will be my 150,000. And then what we're going to do is we still have a leftover will go to your retained earning. In this case it is my $7,500. So what happens in this case, if your fair value of your asset, fair value of your common share is more, you clear the contributor surplus, leftover will go to the retained earning. But if it's a less, the difference will go to your contributed surplus. Going further, my next one is dividend in kind. So we done cash dividends, we done stock dividend, and now this is the first time we're going to have dividend in kind. So let's see what we are doing with this one. So it says prepare the journal entry following unrelated events. So anything that we are doing here is unrelated, they're not related to each other. So the first one is, this case is they declared a stock dividend and distributed it. So they did both, so we have to do both entries. How much stock dividend we declared? 6% of the common shares to the common shares. So that's what we did, 6% stock dividend. So we have 600,000 common shares outstanding. We distributed 6% of it. The fair value of the stock was at the time of stock dividend was 48. So what we're going to do is we are going to debit stock dividend. This will give me 1,728,000. Then what we're going to do is credit will be my common stock dividends distributable, and that will be 1,728,000. So this is at the time you declare a dividend, and the question we were asked for declare and we distribute. If you distributed it, we will have to do a second entry because they said and distributed. So debit will be your common stock dividends distributable, credit will be my common shares. Going further, now this is called dividend in a kind. Dividend in a kind is when you, instead of cash, instead of stocks, we gave them a property. We could give them a building, any type of building, land, or fair value investment. So in this case, we have a fair value investment. The company decided to declare a dividend in a kind, and let's see what the question is asking. So we have 824,000 in my fair value. So we're not distributing everything, but we're distributing only part of the investment. So let's see what happens in this case. On January 8th, what we did is we declared. What did we declare? We declared and paid on the 28th. So we have to do first transaction on the January 8th when we declare a dividend. We wanted to know how much dividend was declared. The investment have a carrying value of 160,000, fair value of at December 31st on 23. This was the fair value on December 31st, and then what we did is the fair value on January 8th was 168. So what is the question asking you? We declared a stock dividend of 165,000. So that's a dividend in kind of 165,000. But if you look at it, in our fair value net income investment, we have is 824, but we're not declaring we're not giving out in dividend in kind of whole 824,000. What we're giving out is 165,000. But before we get to it, the value, they told us the value of this fair value investment was 160,000, but the value that when we declared our dividend was January 8th. This value was December 31st. So what we had to do is, before we declare our dividend, what we needed to do is we have to bring the investment value to 165,000. If we had to value, we have to bring it up to that value, means we have an increase, or we have an increase, or we have a gain from December 31st to January 8th of 5,000. And how do we record a gain on that investment? We will debit the fair value net income investment. Credit will be my gain, and the gain will be recorded as investment income or loss. So income or loss of $5,000. So that's my first entry. Second entry will be, you have to declare a dividend on January 8th. And how would we declare a dividend? You will have a debit will be your dividend. Credit will be called property dividends payable. That will be 165,000. And then now on the 28th, what we are doing is we're giving them the investment. We're giving our shareholders the investment. So debit will be your property dividend payable. Credit will be your fair value net income investment. This one is taking you back to your volume 1, where you have a fair value investment. So bring it up to the value, declare the dividend, and then pay the dividend. So that's what we did. Now we're going to do our next one, 59. In this case, we have 2-for-1 split. They're saying prepare the necessary journal entry. The board votes for 2-for-1 split. When you have 2-for-1, this will help you, means if you own 1 share, now you own 2 shares. We could have 1-for-2 split, 1/2. So now the shares are going to split it in half. We could also have 3-for-1, 3/1. That's a 3. So the split will be whatever is given to you in the question. So let's see what happens when you have a stock. When the company issue a stock dividend, stock split, when the stock split happens. The common share of Hoover Inc. are currently selling at $143 per share. The bank wants to reduce the share price and increase the share value. So what we wanted to do is we wanted to bring the price of the shares down, and we wanted to increase the number of shares that are outstanding. The per share carrying value is 34. They currently have 1 million shares outstanding. When the stock split happens, the only thing that happens is that your number of shares increase. If number of shares increase, of course the value of the shares goes down. So if I had 100 million shares issued and outstanding, we did 2-for-1 split, and now what happens is now the company has $2 million. It will be on, when we declare a stock split, we call it as a memo entry. Memo entry will be your number of shares outstanding will increase to $2 million. Then what happens in this case, we're looking for what is happening with the next one. The board of directors votes for 100% stock dividend at a fair value of the shares. I think briefly discuss the accounting securities. This was part of D, so we are just going to do it here. The company declares a stock dividend. So how do we do that? In this case, we know that debit will be dividend. You could do stock dividend, and credit will be common stock dividend distributable. And that will be, we had 1 million shares. that were outstanding. We don't stock, each is an independent, so stock split has nothing to do with the stock dividend. So they're just saying it, would you do an entry at the stock split? No, we will not do an entry. We will only do a memo entry. In this case, what we're doing is we're issuing a stock split, stock dividend at the fair value is 143. Debit will be your stock dividend of 143 million, 143 million. Then what we're going to do is we're going to distribute it. When you distribute it, we will debit common stock dividend and then credit will be your common shares. So in this case, sorry. So let's see what the question. Briefly discuss the accounting and securities makes a difference between the two methods by increasing the number of shares. Now, what does that mean? It doesn't mean anything. It just says that if you do a larger stock, serves the same function with regard to the security market. It does the same function. What are we doing is we're increasing the number of shares. That's all we are doing. Both techniques allowed by the board of directors to increase the quantity of shares. So when you end the security market and increasing the number, is there a difference? No, it serves the same purpose. One is both has to be issued by the board of directors. It has to be allowed by the board of directors to increase the number of shares outstanding. So we have done 3 more questions, and I have done a lot more questions in the first video. I hope this will help you with this topic. But if you have any other question, send a message underneath this video so that I can record more video for you. Thank you for subscribing and thank you for listening to me. Take care and bye for now.